Hey, thank you.
Steve, hello, hello. Happy Monday.
Happy Monday, Jamie.
Well, how was your weekend, man? Did you have a relaxing
My
weekend?
weekend was magical. My
It,
weekend was wonderful. It went too quick.
it was. It was an enjoyable weekend. They always go too quick, but here we are on another Monday, and June is almost done, which seems very odd in and of itself. Time's just passing us by. So, welcome everyone to another Monday edition of the Office Hours with myself and Steve. Before we get rolling here, as usual, take care of the legal mumbo jumbo, and just want to make everybody aware that everything we share with you today and in every webinar is for educational purposes only. If you do need investment advice, please seek out a registered investment advisor, a registered broker, somebody that's licensed to do that type of stuff. So once again, our content is strictly for educational purposes only. All right, and for the new people in here, since 50% of the people in the webinar currently are not subscribers, we want to take the chance here to let you know that it's not just the award-winning technology that we have and continue to update frequently, but we built a community around that technology, and it kind of starts off with the Traders Room, which is free to not only Trade Ideas subscribers, but even if you're not a subscriber, you can access that community, sit and listen to Barry and anywhere between 400, 500, 600 people that are also in there on any given day. And Barry does a great job. So if you haven't stopped in there yet, by all means, set up a different, you have to set up a different login, but it's very easy. So do that. And of course, today it's myself and Steve. Steve takes the reins tomorrow for the Trade of the Week, which I'm sure Steve will kind of touch base on the last one. Those have all been doing pretty darn good if you haven't been keeping up. Q&A demo, which kind of changed things up a little bit, bring in Dan Merkin, Brad Williams, the CEO and the CTO of Trade Ideas, always entertaining. And then Andy rounds it out on Thursdays, and I ride shotgun with him. Now, the Friday support session is just something that we started not quite a month ago, or right about there. I think we're in this will be the fourth session, Steve, or fifth. I kind of lose track. But
Yep.
every
We've
day
done
from
four.
11 to 2 p.m. Eastern, 8 to 11 Pacific Standard Time. It's pretty much just a free-for-all, with the exception of the Brokerage Plus. So any questions you might have, pop into that Friday support webinar, and we'd love to see you in there. All right, now on to the fun stuff. I was telling Steve, today was Happy Fun Day. Lots of interesting observations today. Holly had a stellar day. Lots of good plays to be had. Of course, the trick is you have to know where to look. So before we get into that stuff, I'm going to pass it back over to you, Steve. Let you tell us a little bit about the overall.
All right.
There you go.
I can do that. I don't even have to have a reason. All right. Well, I got Trade of the Week on there. We'll come back to that perhaps. SPY is where we always start with, and wanting to call out what happened today. It's kind of interesting. On the daily chart, our S&Ps are just kind of staying in this range and not going anywhere. And the diamonds had a nice bounce. I think the last webinar I did, I talked about how it just textbook backing and filling. 1, 2, 3 days, a little wick at the bottom, filled the gap perfectly in the Dow and the diamonds, and probably was trying to put in a higher low. It did. However, it gave back a lot of today. It was a lot higher earlier. The Qs were, once again, showing up to be the problem. There is a lot of red on the Qs. There was a lot of red in technology today. However, the fourth and final ETF that I like to look at finished in kind of a doji fashion, perfect doji, this IWM. And this IWM has been very confusing, for lack of a better word. It's been in a really junky range for most of the year, while I might add the Qs were leading the way and then the Dow was leading the way. But there's still room for our Russell 2000 small cap friends to possibly make a stand at the old rotation game. It's just going to be a matter of the market handing the baton to the IWM. Now, I'm not predicting it's going to happen, but I'm watching it because, again, look at today's wick. Nice and strong doji, no red in that candle. Technology, disgustingly red. Spiders gave a lot back, and even the Dow gave a little bit back. So now we got the IWM, the Russell 2000 on a Monday, showing a little bit of strength compared to the rest. So we didn't really have necessarily a complete broad-based sector pullback, sell-off, excuse me, across the board. It seems like these small cap Russell 2000s are still hanging in there. So, you know, let's keep an eye on that. One day does not a trend change make, but the technology stocks, Qs, were definitely throwing up a lot of noise today, like they may be getting ready to throw a fit again. So let's quickly look at that. I've used this trend line here for a while now. It's touched this 1, 2, 3, 4, 5 times or so here. 1, 2, 3, 4, 5. That's a very well-defined trend line there in the Qs. So that's the downside that I think we need to watch. Keep an eye on that trend line. That's what's been holding. We've got a little bit of space there. In the S&Ps, same trend line going back, same time difference, again about 4 or 5 touches there on that trend line. We're well above those moments, those levels. So in my world, you know, the S&P is this orange line could be some near-term downside that it could shoot for if things got real ugly. But then beyond that, you know, that trend line is right there as well. So that's pretty much what I'm noticing today. And pretty much what I'm noticing today, with the technology being the worst and the Russell 2000 trying to hold up the best, but still very much intact are these trend lines and the Qs for the most part. They're going to be threatening that trend line first if we get any more weakness, because they do seem to be the closest to it. So, you know, that's what we've got. The buyers are still in control. Like I said earlier, one day does not a bunch of red candles make for a big trend change, as we've seen before. You know, chutes and ladders. We had fun talking about that last week. The old board game chutes and ladders. Volatility down, volatility up, gapping all over the place. So that's my takeaway. Technology weak. Russell 2000 could have a shot. This could be a higher low that it put in here. And I'm telling you guys, if you got price alerts, that blue line right there, well, that's a bona fide price alert, because I want to know when the IWM does eventually take that out. Where's my price alerts? Here we go. So working IWM, there it is right there. IWM all-time highs is a working alert. Just another example of how you want to turn your back on stuff, set it and forget it, and keep it simple and focused. So if that IWM alert goes off, you can bet your bottom dollar I'm going to be looking at a lot of stocks under $5, under $10, looking for some low cap stuff. So that could be the trigger there. Real quick, for those that didn't see, Crocs is the trade of the week. Got off to a decent start today. Basically a nice kind of another trend change, rounding bottom here, and I love the way it was flagging. Showed up on like a 5-day, 10-day congestion scan, and that's breaking out of that as we were hoping today. So Crocs is behaving well, and the way I had it in the earlier chart markups was easier to see the risk and the reward. Basically, the risk is, let me put my crosshairs back on. I'm surprised that didn't save. Our risk is right about down here, 705-ish, plus or minus a couple pennies, and our reward is going to be right up here around 9. So graphically speaking, here's our little band. That was the trigger band here today. The orange line triggered it. Our downside is basically this space, and our upside is the distance between here and 9. So visually speaking, looks kind of like the gradient shading that we've been adding to our Trade Ideas alert charts, which I'm in no means trying to tease you guys with it, but this is some good stuff, and hopefully it's coming out in beta here, hopefully in a few days or even a week. Because there's a lot of people been asking for it. It's a pretty cool new feature overlay here. But for the most part, I'm trying to do the same thing that gradient does with these orange lines. Here's our risk, and up here is our reward going back to these high levels. So that's what's going on in Crocs. Somebody did ask what the IWM is, and it's the ETF for the Russell 2000. So using the SPY as a proxy for the S&P 500, using the Qs for the NASDAQ 100, and using the DIA for the Dow, the Diamond, the IWM simply shows up as the Russell 2000 ETF. So that's going to be your small cap stuff. Just wanted to address Jim's question there, or somebody else's question. I'm sorry, Jay. All right. Jim, yeah, if you have a question on one of the scanners on my screen, you can always email me directly, steve@trade-ideas.com. That one is a custom one I was working on for somebody, but I can help you for sure. So that's pretty much it for me, a little market recap. Anything you want to add, James?
Hey, was that also a doji close on the IWM?
It does. It was exactly a doji. It was a Christian doji. It looks like a cross. Look at that. No red, no green. Held up very well, digging in off this higher low. And so I went ahead and set an alert up here. I mean, it could happen tomorrow, it could happen the next day, but if this alert goes off, my complete and utter focus goes towards small caps, because that tells me the rotation is probably on, and it's the time for the little guys to make a run. And I hate to say it, but typically when you hear people saying, oh my God, even the junk stocks are running now, that usually can mean that the last bus stop is getting close to the big bull run, when the little stocks, the little small cap junk stocks start running. Typically what I'm trying to say is they might show up at the end of a big bull run. I've seen it before. I know Jamie can corroborate. I've seen it many times. It's just kind of something that the market does when it's getting tired. The junk stocks are usually some of the last ones to pop. So we shall see. And they are the best movers percentage-wise. Exactly, David. So when the junk stocks start moving, those are the days that can make your month if you're on your game.
And then, Steve, that makes a lot of sense considering what we saw, you know, the process that started. How many Fridays ago was it when we had that first little swoon, and IWM looking like it received some of what came out of the queue. So obviously rebalancings don't happen in one session, or do they? I know that the rebalancing, I'm not talking about the official rebalancings that come out from time to time, but it definitely looks like some rotation for sure, and probably some continuation of that. And the doji, that just means, hey, something might happen. A move is imminent. It doesn't mean necessarily it's up or down, but I agree with everything you summed up there, Steve.
Yeah, I just don't want to miss it if it takes out this high. So that's why we use our price alerts. If you guys have price alerts enabled, it's right-click, create price alert, and off you go.
Yeah, so we're going to showcase that additionally when we talk about all these Holly trades and how to participate further from the signal price that Holly gives you.
All right, you want me to pass it back to you?
Yes, please.
I can do that. There you go. Yes, this will be recorded. They left after I answered them. So yes, for those that are wondering, this will be recorded on our YouTube channel. It will be uploaded later this evening.
Yep. Always record them. Unless we have a technical glitch, which happens from time to time, but not very often. Okay, so thank you very much, Steve, for that enlightening recap. And now we're going to talk about Miss Holly and what she did today. So, whoops. Let's just get out of here. We'll come back to that slide because that is an interesting, relevant slide today. All right, so Holly was busy making the donuts today. She surprised me. Let me get my thing right here. Okay, so we can see the strategy complement that she showed up with here today. We had 3 shorts, 1, 2, 3, 4, 5, 6, 7, 8, accompanied with 9 longs for a total of 12 strategies in the starting team today. Of course, these guys remained silent. In other words, the traps that we laid out, nothing really fell into them. That's why they're showing a 0 count today. Whereas these guys all had a nice little assortment of trades. Nobody really running off with the show, but a nice distribution. 12, 15, 18, 21, 26, 29, and 31. So pretty active day for Holly. And before we get into the trade details, just kind of want to point out what I like to point out and keep begging the coders for a larger version of this that I can actually mark up. But, you know, we're seeing the same thing here, just to the tune of a little bit different of a scale, whether we're looking at risk off or risk on today. Brief period of drawdown as Holly opens up her intraday small hedge fund. Same thing with risk on, a little bit less. So the bottom line is this. We see this all the time, and we either see, you know, maybe the gyration from red to green, red to green, red to green. A lot of the times the statistics just aren't catching. In other words, the stat noise is high on a given day. Maybe we'll see that flopping around that line all day. But today, not the case. We use risk on for an example here. If I was able to draw lines right across that area there, as soon as we perked up, took a little dip back down, and then for even further confirmation, could have redrawn a line right there and then treated this just like a stock. Okay, is, you know, how aggressive should I be with Holly? Well, when you see this playing out, and once again breaking above these lines here and this steep, just steady upward rise, well, then you know the statistical probability is starting to take hold, and this can give you, you know, hey, should I do more shares in a Holly trade, or should I just start being more aggressive because I've just been kind of watching thus far to see, you know, to see if this chart does break to the upside. But very good visuals here today. We can see risk off on that total of trades, 92 cents. Clearly today was a risk on day, accepting that bigger risk for a bigger move. Definitely paid off. This is how she finished, but at one point today, up well over 5 points at the tops here. Plenty of time for us to make decisions and go, well, what do we want to hold? What would we like to pair? So without further ado, just going to stretch out the entire blotter here just so everybody can get a good idea. If we're just looking at risk off only, which is Holly obeying her rules to the T, obeying those time stops, obeying those profit saves, reduce risk, and stops, this is what happened. And we can see a nice little gradient here from the greens down to the reds. You know, biggest green is, or the biggest winner, $1, biggest loser 32 cents, and then lots of additional risk off winners here. Now I'm going to resort by risk on. And we're going to take a look at several trades today that not only were they just beautiful signals, but there were clearly defined parameters on leveraging the position up and adding to the position. So right here, all right, and you really didn't have to squint your eyes or step across the room to see these additional setups that were present in those Holly trades today. So let's take a look at this first one here, SELB. Right up here at the top. And obviously, since I don't have to draw lines anymore for Holly, we've got those nice and colored for us right here. So Holly gets the call, or Holly gives the call. SELB, I'm getting long right here. Well, number one, why is that such a good play? Well, number one, just to reiterate here, what is Holly? Holly is a statistical model, right? Her strong point is delivering to us statistically weighted entries. Now, 55%, not too shabby. You know, anything over 50%, as long as the profit factor is decent, can be a good strategy, and sometimes even when it's less with a decent profit factor. But in this case, on the wake-up call, we had 55.9% to start right at this signal. And of course, we can see this little guy, sometimes they just go straight up. A lot of the times, you might get a little bit of green, but then it comes back to this line and kind of hovers around it. Maybe it passes through it a couple of times before it goes. And of course, some of them don't work, and that's when they get stopped out. But this one just took off immediately. What I really liked and still like about this signal is what the stock had done previously. And of course, I forgot to put this little line in here. But it had already just penetrated that range. So we had a nice little equalization of buyers and sellers right here. And then as we creep up here, we get a range break. And then of course, Holly calls it out, which, you know, we never like to chase a range break. If I was just playing a strict range break and I didn't see it until up here, I'd be like, well, I'm not going to chase it. Missed money is much better than lost money. But in this case, it just happened to be perfect timing. So in addition to the 55.9% probability behind this play, I'm also noticing a very simple range break, you know, giving me a little more confidence on top of that. The second factor that gives me confidence, not just the statistical probability. Of course, we take the trade or we don't take the trade. It's up to you as you get more and more comfortable. But let's say we participated with Ollie here. We're all happy because it's just moving our way immediately. We didn't have to suffer any pullback. Pain-free trade thus far. And then, of course, exit is the second part of the equation. So once the stock comes up here and tops out at 1960, takes a little pullback. Of course, stocks do that. It'd be nice if they just stair-stepped up all day. Sometimes they do, but most of the time they do not. But let's say we hold the trade, or to get used to assessing risk on, risk off, it's always a good idea maybe to do a little bit of both. We can see right here, well, why did my column blank out there, Steve?
Well, because it's a developer's version and it might need to be reported. I don't know.
Now, fear not, because this is the risk off
there
area
it is.
right here, right?
If you highlight it, when the target hit.
Yeah, there we go. Okay, so there we go.
We need to report that. That should not be that way. Okay.
And ladies and gentlemen, I know everybody's been wanting this version, but this is exactly why we test them thoroughly before we spin them out to you. All right?
Yep.
Okay. So, yeah, target hit. Gotta hate that, right? Gotta hate it when the profit targets hit. But in any case, profit targets hit, very good. Whether we stay in it or whether we exit with Ollie, up to you. Taking a point off the table right there, certainly nothing wrong with that on an $18 stock.
That's a 5-minute candle, right?
Yeah, these are 5-minute candles.
Okay.
So stock takes a pullback, no big surprise there, then gyrates its way back up to its highs. Ooh, and guess what? This pattern here is repeating itself up here from the prior high, a little equalization here, and then pop. So there was the opportunity to re-enter this trade and get a little bit more out of it with relatively very low risk. Entry bar here. Of course, let's see, since Holly has commandeered this chart, then I can't just see what it would have looked like from the shading, Steve. You know,
right.
had we double clicked on it here, but it would have mapped out a nice little profit loss area for you.
Even if you type in the symbol, I still think it's going to show that.
It will. It will. Yeah. But the bottom line is this: if you're using this as your entry bar and using the prior 15 minutes, not including entry bar as your low, you can easily map out your own stop loss. Would have been about right there for the types of range breaks that I typically participate in. So just a real good example of Holly pegging a really good trade and then it giving a second setup after she was done with it.
What does the daily look like? How much room was there on the daily?
Question.
Interesting. Look at that.
So, I mean, you know, this one could be a good one to keep an eye on.
But even going back 7 or 8 days there, you know, taking out those recent highs, if you zoom back in, that was the kind of thing that you also want to basically, you know, map out on your brain, the intraday chart, and what's the bigger picture? Well, the bigger picture was Holly calling an entry pretty much right at that breakout.
Mm-hmm. So really good stuff, and that was just the first one. There's several more here. All right, next on the list, this little guy right here, FND. This came from Float On, which typically looks at the stocks with smaller floats. And we see Float On came strong to the party. By the way, look, 5 trades today, nailed them all. Top performing strategy. That also coincides with some metrics I'll show you later, which There were slight buying biases in all market caps today, a little bit bigger to the large caps, but the same little difference on the smaller caps. And then we see this, hey, makes a lot of sense. All right, so float on, rocking a 64.1, produced the FND. Here's Holly's initial buy signal right here. So then it's kind of like Groundhog Day in here, groundhog trading. So this one just happens to coincide. So not only do we have extremely high probability, it's happening at basically the same time as the range break. Double star, double star. And of course, what do we have here? We have continuation, just exactly what I was describing, how some of these trades work out. We get a pass through the buy signal, and then we come back down here through it again, almost to the stop, but not quite. And once again, this is why we have stop losses. We have to let the trade work. We have to give it time. If it hits our stop loss, too bad. We move on. In this case, it came close, but did not trigger. So let's say we're in 100 shares with Holly here. We're still in it. We've noticed first range break here, pops a high, comes back down. You should really get into the habit of not only marking the chart up like so, but once that high's been identified, go set a price alert. Set that price alert. Now this one's going to auto trigger obviously because the market is closed, but that way if you're in a little bit, got a little bit of skin in the game, or maybe you didn't participate but you saw it back off and you're telling yourself, well, based on what I remember from the webinars and this simple range break pattern, if it comes back up here and breaches that point, which it did right here, I want to know about it. So whether you participated and held a couple of hundred through this little wiggle here and then leveraged your position up because you could see the range break occurring, maybe it had additional volume, maybe it didn't, but there's lots of ways and trade ideas to find that out. A lot of the times, and I know this is one of Steve's favorite, on my single stock detail, I always have the 5-minute. So as soon as I pull something up, I can see what that 5-minute volume is right here. Of course, anything over 100 being normal. So a lot of the times you'll pull them up here, you'll look down here and see 250, 300, and those are definitely the ones that you want to be a little bit more aggressive on, assuming the chart dictates that. So if you see statistical probability coupled with a simple range break and extremely high volume, it's like a 3-star trade, and it's kind of hard to beat that power trio of statistical probability coupled with the pattern and having extremely high volume. And as you see, continuation and plenty of time to decide when you're going to get out. All right, FND next on the list is my friend NS here. So, boy, obviously lots of buyers in here doing the step up game, going up on its little escalator here. Holly gets the call right here, and then once again, just pretty much off to the races. And then as it does get a little higher here, we can play that same game of figuring out, well, if this thing continues on this tangent, will there be opportunities to increase my position? And in this case, we did have a little leveling out here, a little range-bound activity after that little wick there, and then we get a punch through here. Of course, this one throws a little back at us. Let's see. If we would have participated in this second run here, would we have gotten stopped out using that 15-minute look back? So here's the entry candle. It might be kind of hard for some people to see that. So entry candle here, 5, 10, 15, right outside of that wick would have been your stop loss. And of course, close, but no cigar, and then a continuation here. And once again, not to get too far ahead of myself here, because this is what we call, risk on. Is there a reason to get out? The shaded area is Holly getting out on risk off. Of course, we can see why she's, or profit save, being the risk off reason why she's getting out. But, there's a big difference here between 12 That's a huge difference, right? An extra 68 cents laying on the table. So the name of the game, we know we're not going to top tick everything. Every once in a while we will get lucky, which is what it is, and top tick something. But the name of the game here when you're interacting with Holly is let's just try to get some of that spread.
You look at the daily chart for a possible target. Should I stay for risk on? Where's the next level of resistance? Well, it kind of hit it right at the close there. That last red candle, he'll draw it up for you. So there you go. I mean, you know, defer to the longer time frame to try and find where the upside targets, where the sellers may start to show up next. And secondly, you know, a lot of this is that Jamie's going through right now. He's also doing in pretty much real time on Twitter. I think he sent out, you know, a dozen or so setups just like these charts we're marking up today. So hang around at the end so you can catch his Twitter handle. And a lot of this stuff that we talk about after the fact is being broken down in real time on Twitter by Jamie.
Right, and we've got one more Holly trade to get out of the way here. And then I will go into this next topic, which if I can find...
I was prefacing.
My spreadsheet here. There we go. You know, the annoying thing about GoToWebinar is it likes to keep all of its windows on top. I guess that's okay though. All right, so let's see here. EVHC. All right, so once again, Holly brings the play to our attention right here. And let's see here. Nice chart was the guy that produced this one. We can see not quite as beefy as float on, but 62.3%, which is really good. By the way, a little underperformance here, a little overperformance here, and some underperformance down here. But looking at the EVHC, you know, it just doesn't really get a whole, I mean, it can get better than this, but man, the number of these that she spit out today is just incredible because we did have this little consolidation right here and then whoosh, straight up here, and then puts in its high on that wick right there and then kind of goes to sleep just for about 5-10 minutes. And then what is it doing right here? Even though this consolidation period is very tiny, and the smaller they are, the harder they are to identify generally. We like to see something that appeals to us. Of course, the stock had just begun that little process that appeals to us. But the bottom line is this. Holly gives us the call here, and then we just go up a little bit, and then we just do a little sideways dance, which is very common. Not necessarily, yeah, well, actually the blue line here. So you see we're gyrating through that entry line several times, right? So keep in mind, when you see this, start thinking, is this going to be good for a second entry? And so when you see this top put in, you see this little area here, you see this top put in, you see this next candle, you're like, okay, this could be the beginning of the consolidation. So I've drawn the line here, but of course, so you don't miss it, which is really easy to do, set the price alert. You set that price alert, no way you're going to miss it. So that when it does do this, you can be like, okay, I'm going to go ahead and tack into another 100 shares here. We get more sideways action, and then this time, different. The buyer couldn't hold off anymore. He's like, you know, I'm getting some shares in here, but I really got more to get. Comes out here. This is the result. And then, of course, we see the repetition again of that consolidation pattern. Time ran out on the day, and we had a little pullback here. Probably a lot of people that were long in this area going, well, I think that's done for the day. Go ahead and take my money. But another interesting observation is as it was popping above this level, once again it was breaking the channel out, or breaking out of the channel here, which leads me to the very important point that the beautiful thing about these range break patterns is they're fractal. They can occur on any time frame. So if we're using one for the intraday and at the same time see the same pattern being mimicked on the daily, well, it means the same thing. There's a chance of higher movement. So I think that's it for the Holly showcasing today. Just 4 really good trades that worked really well, that it was very clear once you get used to this methodology on when to add to the position, which is a very tricky business, especially if you're new to the trading game.
Real quick, Jay asked a question if there's any good tutorial videos. I did drop that in the all reply questions box. There's a YouTube link there for those that are curious or interested. It's a 1-hour getting started video, so a lot more basic stuff for people who are not up to speed.
Yes, indeed. Okay, so now let's move on to here. Intraday range breaks, which we just briefly touched on, because Holly, you know, a lot of those, the patterns that she's scanning aren't necessarily range breaks, but when they coincide with that simple pattern, it's always a good thing. Now, before I move on to this next topic, I just want to point out one more time, Holly made all of her points long today in a market where the biggest move was this nice little plunge that we had. Whether it's the SPY, the Qs, or the Dow, they all pretty much the same, right? Biggest move of the day was down. Holly made all her money long. What I'm about to show you were stocks that exhibited this range break pattern and went up when the market's coming down. And today, pickings were pretty slim to the upside unless you knew where to look. You know, and kind of think about it like this. I know I've used the volcano analogy a lot, but every day in the market is a hurricane. Now, sometimes the hurricane's going to be bigger than other days. That just means there's more opportunity out there. But every day is a hurricane, and, you know, everybody knows pretty much that you can be in the eye of the hurricane and everything is calm. You know, you've seen those airplanes that make those journeys, and, hey, everything's hunky-dory in there. So let's do our trading every day in the eye of the hurricane. Let's just go to where things are a lot calmer and make a lot more sense and are a lot more easier to identify. So all the plays that I'm about to show you came from the Turbo Up family, which I've shared out many times and will share out again today before we're done here.
I have a feeling you will, yes.
Yep. So let's take a look. And of course, I'm gonna show 4 of these guys, but I believe on Twitter today, and you know, don't get mad at me if I'm off by 1 stock, but out of 15 of these range breaks that I tweeted out, 12 of them you had the opportunity to exit for a profit. Some of them continued, some of them pulled it back over, but you know, getting in the money is the first part of the equation. So if 12 out of 15 entries, a trader has the opportunity to exit for a profit, then he should be doing okay, unless he's just really, he or she is really messing up their risk management, right? So let's take a look. And by the way, the window is this little guy right here. It's a multi-strategy window, and it's the same strategy but just carved up into different market caps, which is another thing that kind of helped me figure out it was the small caps that were kind of doing their thing today, or not the big ones. You can see this first one that we're going to take a look at today. Look, sub 2 billion market cap. All right, so we can see here, let me just kind of expand this guy out a little bit. They didn't have to squinch their eyes so much. CARA, therapeutics, hey, we all know the biotechs have kind of been moving around here lately. But I try not to discriminate. A lot of people like to shy away from the biotechs for good reason. I mean, there's a lot of volatility in them. Of course, on the intraday, I'm not saying that something can't ever get halted, because it can. But, you know, I try to just rely on the chart. Steve likes to say, the footprints in the sand are the most important thing. So here we can see CARA runs up in the first 20 minutes, puts in its high, and takes a little breather. Comes back up, tests that high. I get the alert coming through here. Hey, CARA at that time, new high. And the only reason it's going to come through here is because not only is it hitting a new high, but it's also meeting the requirements in this filter set here, which 300% of normal minimum on the last 1 minute candle that traded, and the position in the lifetime range has to be at 100. And the alert is the new high because why? it can't get out of there without hitting it. So there was plenty of time to react. Take the long ride here. What's my risk if I'm wrong? Well, 5, 10, 15. Already taken the liberty of drawing that stop loss line there. Nice and definable. And we can see immediate follow through and immediate more follow through.
So correct me if I'm wrong here. You're calling this one no resistance primarily because these are all making all-time highs, correct?
Right. So I'm glad you asked that question because that's what the position and lifetime range dictates.
That's what I was going to do. I just wanted to, it's a very important filter setting that Jamie went over, and I wanted to just back up and remind people why that's so important. Position and all-time range. These are stocks that have zero resistance above head. When we say look left and find out where the sellers were last time, we don't have that here. So these are unique stocks in that they're making all-time highs, and the way in which we find those is using that filter and making it a 100 minimum to make sure that we are above all-time highs. I'll do that a lot with position in 1 year range to try and find stocks making 52-week highs, but we're talking about a whole different animal here, all-time high using position in lifetime range.
Right, and the theory behind adding that metric was, well, we're always talking about when we're long a stock, whether it's from a TI window or Holly or from some other source, we look to the left and we identify potential resistance. Well, there's not any here. Now that doesn't mean they're going to go up indefinitely. Stocks, some go up.
Well, it's a perfect time to be using this filter as our indexes continue to try and make new highs as well. So it's a good parity.
Right. And the bottom line is this: the stock continued all day. It took its ebbs and flows and pullbacks, but even if you held it all day, when it took this more severe pullback, still didn't get stopped out. So whether you scalped a little bit here, and then maybe when it came back down here, you were already aware of it, so you're like, hey, I might take another poke at it. But the bottom line is plenty of time to decide what you wanted to do with that profit. Get out a half, hold the other half. Play the same game you do with Holly. If I'm in 200, I plug out of 100 here. I use my stop loss. If you want to get a little bit more conservative, set the second lot for a break even, so at least if you get stopped out of that second lot, you still made the first lot, right? It's just risk management 101 in this case.
That's our number one job.
Okay, so this next one, and you're going to notice, look, the AI data is over there, okay? That's because this was also a Holly trade that came across my turbo ups right about the same time that Holly was calling it. So once again, Holly calls it at the same time I hear it come across this with my little sound. I'm like, oh, just like the range break setups that Holly coincides with, this is an extra, the word eludes me, clarifier, all right? Extra confirmation that this could be a really good trade. And of course, we had the statistical probability behind us because CDNA was triggered by float on. Hey, there it is again, the theme of the day, right? The low cap stocks going up. So we know right off the bat, we've got that really good plus 60% probability. And then we also have a, you guessed it, range break with volume as well. And we can see what happened. And this one pretty much flattened out pretty good. You could have tried to play this range break again. It just didn't go that much higher. But, plenty of time to flatten that second lot or, take a penny or two loser on it. But the bottom line is that was a really nice clean break a little bit later in the day. But the beautiful thing about these patterns is they come in all shapes and sizes at all times of the day. All right, let's see what else we had. Let's see. Aha, this one was a really good one as well. Once again, what sector is this one in? Okay, medical laboratories seem to be in play here lately. So once again, the range break here, low was here, high got put in here, and this is right where it came through. Turbo windows doing the really high volume, and then of course, just like with a Holly play, what happens? Sometimes they go up, sometimes they hug that line, dip back through it 3, 4, 5, 6 times maybe. but that's a good sign.
No reason to get out.
Yep. No reason to get out, and then boom, we've got, all of a sudden the green, the green elevator materializes. Oh, and just coincidentally, if you get proficient at identifying these little ranges here, could have popped into another little lot right there for the next leg up. And once again, we're relying on very simple metrics, and I'm going to hammer this as much as I possibly can because it works and it's simple. And just to play devil's advocate here, do you see any moving averages on this chart? Do you see any Fibonacci's or Bollinger Bands or Ikimoku clouds? No, because this stock did that regardless of whether those studies were there or not. Now you could lay them on top, but all that would be are correlations. And one more to go here. Everybody likes to get packages. So here we have this one. Now this one is a little bit different, and I'll explain to you why it looks a little bit different. So stock was pretty dead back in here, wasn't hitting a high. Well, I won't say dead, just wasn't on my radar, let's say, because it put in its low, put in its high, gets into this range, which isn't really the prettiest thing in the world, but this little action right here, it's just slowly stair-stepping back up. And of course, the real range break would have occurred right here, all right, because we can see that's when it penetrated. But guess what? It didn't really come, it didn't come across my window until here. That's when the volume kicked in. So sometimes, as long as these bars aren't too far away, we don't want to chase, but if we know that it's already made it above that little level right there, and now the volume is starting to kick in, well, not the biggest move on the world, but still, if we bought 110.79s there, pretty quickly, we're up to 111.04, and then a little sideways action and plenty of time to get out. So even though that one didn't knock the roof off, still a good move up. Sometimes they're going to be just a little bit behind the break, but we really only want to pay attention to them when the volume comes in. And of course, that's one of the precursors to this window is you don't have to worry about the volume. The volume's there. All we have to do then is look for the pattern and go yes or no. All right, so we did PKG, LH, CARA, CVNA, which happened to coincide with Holly as well. And, that's only 4 of the 15. As I said earlier, 12 out of 15, you have the opportunity to exit for a profit. A lot of them rolled over today just simply because of the nature of the market. But, hey, if I could be in the money a quarter, 30 cents on every trade, that's a good problem to have, and then we just have to rely on the trade management to preserve what capital we have generated.
Mm-hmm. Well, yeah, as promised, do have some requests for that. Great explanation as to how it's used, dividing this thing up into thirds based on market cap and looking for stocks with no resistance. The person that's asking for it, there's 2 steps involved. Once you've received it, and if you've been into Barry's room, you've heard this a million times, don't forget to save it to your cloud, because if you had it and then you lost it, you shut the machine down without saving it to the cloud. When you turn your machine back on, it's not going to be in there. So it's a great habit to get into. Once you've loaded from the cloud and looked at it and got it on your screen, right-click in the middle of it and save it to your cloud. So you'll never have to worry about it getting lost again.
That is true. Just always save it to your cloud. That way you never have to worry. If you don't have to worry about messing it up, because you can always just spawn the original version.
Mm-hmm. If you want to work on a new version, you can keep that one in there and then rename a new version and have 2 versions in the cloud. It's up to you.
All right, let's see if I'm missing out on anything over here. Nope, I think we got through it. Now, I did want to show this because I've also chopped my compare counts up into different market caps, and I've been doing some experimentation. Okay, if I let these things run all day without taking a 20-minute into the market count or a 15-minute count, am I seeing a lot of disparity? And really, it just depends on the day, and a lot of the times we can just rely on our charts, try to figure out, is the move stalling, things of that nature. So what I found very interesting is these were the guys that gave a little continuation from these guys. But see how small the differences were? 53.47, 50.50, 54.46, right? When you see these numbers after the first 15, 20, 30 minutes, an hour, or if you duplicate and try to monitor smaller time frames, the overall count is always a pretty good indicator, and it stayed pretty true today. So once again, it jives with what we actually saw, right? Holly did extremely well hitting the small caps. The small movers, sub 2 billion, had the biggest buy bias, only by about 4%. So it was a thin day to be had, period, but it's nice to see these metrics fall in line with that. So today Holly had a great day on the small caps. Well, a lot of times she has a great day in not the small caps. So it's going to be interesting to see for the remainder of the week, Tuesday, Wednesday, Thursday, if the big caps come back to life. Because I think Holly had one really big day last week, and then just kind of a few smaller winning days, and then some, maybe one losing day in there. Can't remember off the top of my head, but I still think she has a lot more juice in her for the remainder of the week, so I could be wrong. We will see. Now, if you see compare count windows that you create looking at these big indexes with a 55, 58, or even a 60% bias, that's when the day could be what we could call big, or a very, opportunity target rich day. So just keep that in mind. Play around with those compare count windows. I'll tell you what. Let's see. I'll go ahead and drop the large cap one into the chat window as well. And Scott, if you're ready to tell everybody how they can save buku bucks, Steve, unless you have something to add, I think we're ready for
No, not at all. Would you drop it in the window, the compare count window, large cap?
I'm going to drop a compare count window in there.
Good idea. I figured since you showed it, somebody out there is probably wanting it.
You with us, Scott?
Yeah, I was just waiting for my cue.
Yeah, I'm fumbling around over here. Okay. We're ready for you if you're ready.
Sure, yeah. Well, yeah, and something we like to do to thank everyone is provide a discount code. But before that, since you're on this podcast slide, we had a podcast that we launched a few months ago, and we've been growing the audience. The episodes are very interesting, so go ahead and subscribe. It's easy to find. Just search for Trade Ideas Podcast in your favorite app that you use to listen to those things in, and it should pop right up, and you should be able to subscribe. So go ahead and do that. We also have a discount code that's good this month from this webinar, and it is GRAIL, all caps. So it is case sensitive. Use it like it is, like you see it there. And just use that for 15% off your first month or year of Trade Ideas. And remember that whether you're subscribing to either the standard or the premium version of Trade Ideas, you can, I'm just going to drop a handout in there. Both are eligible for a full hour of one-on-one training, whether you're in standard or premium. So as soon as you subscribe to Trade Ideas, even if it's just the $99 a month entry level standard, even using the discount, it's still eligible for that training. So if you're a premium or standard subscriber, you want to go and sign up for an hour of one-on-one training with Steve or Jamie or Andy. And we do recommend you watching some of the videos and doing a little bit of attending the trading room and some webinars before taking the training, so you have your mind around what you want to ask and what you want to get trained on. But you are eligible for that, so do take advantage of it. It's one of the unique things about Trade Ideas that we provide. There's also a handout in your handouts panel. If you just click on the little arrow or the expander icon next to where it says handouts, you can download that link. So thanks for attending. We'll have the recording up later tonight or tomorrow morning. You'll get an email reminder about how to find that playlist, and you can reach out to us by email. Jamie and Steve's emails are up on the screen, or send any of your questions to info@trade-ideas.com. That is the help desk email. And then you can follow Steve at at Today Trader on Twitter. Dan Merkins at Trade Ideas 1. Jamie Hodge is at QuantBot. Thanks, everyone. Follow us on Facebook so you can share some unique content with your friends. And we will see some of you tomorrow in the Trade of the Week webinar. You'll get an invite for that a little bit later on tonight, and a reminder.
I'll be there.
And Steve will be hosting. So
I'll be there.
It's that if you get invited. All right. Thanks, all.
All right.
Thanks, everybody.
See you next time.
Bye-bye.